All right, welcome back everybody. My name's Austin. Today's video is a little bit different than our regular daily news and opinion crypto content. Today's video is primarily for new cryptocurrency investors. If you have been in the space a while, if you subscribe to this channel, then you already know this information. If you're new, highly recommend you watch today's entire video. If you've been in the space a few years, I want you to watch and then I want you to react. Do you agree? Do you disagree? Do you have your own little nugget of wisdom you want to share? This is your moment. So today we're going to discuss 4 things. Why market cap doesn't actually represent real money invested, why this is a lie. Also, circulating versus total supply, what you need to know as an investor, and much, much more. Like always, let's jump in. Starting with the number 1 piece of advice that seasoned investors, it's pretty obvious, but new investors need to know. Do not buy a coin because a cryptocurrency influencer, quote unquote, YouTuber talked about it. This channel is a great jumping off point. You can learn a lot about many different projects on this channel. Again, subscribers of this channel, they know this. They'll say, Austin, this is obvious. A conversation about something is not a cosign on something. But my brother and I, we are not certified financial advisors. We're honestly just 2 guys that were passionate about cryptocurrency, passionate about Bitcoin, and we started a YouTube channel. And we love talking about these projects, finding new projects. But at the same time, we do not know the inner workings of these companies. We only have the information publicly available, which we'll research and we'll bring to you, right? We'll talk about it as peers in the space. Maybe then if you like it, you can start doing more research on it. But never confuse, this goes for any Twitter account, YouTube account regarding cryptocurrency. Never confuse a conversation about something as a cosign, as a reason to invest your money. And why am I stressing this? Well, this market is potentially about to get crazy over these next 8 to 12 months. It is. So that is my number 1 piece of advice for new investors. And we'll get to why market cap doesn't really represent money invested in a project. But first, let me just give you an analogy. You watch sports shows for news and opinion on sports. These are influencers for sports. But you would never put down money on a bet based on something you heard on a talk show. You would come there for the news, you would come there for their opinion, and then maybe do your own research if you want to place a bet. That is how I see our channel in a nutshell. Just myself and Aaron and you at a bar, talking crypto. That's why you tune in. And again, maybe this seems redundant to you. I think more channels should be talking about this, more reminders. I don't know, if I'm alone here, I know most of you get it. This is just, I'm going to reshare this video every 20 to 25 new subscribers that we get. Let's keep going. Again, we're going to be looking in the comments, reading what other people say. Second tip for new cryptocurrency investors, market cap doesn't really represent money invested in a project. And also, a market cap that rises or falls by $100 million, it doesn't mean that $100 million has entered or exited from that asset. So let's just take a random example. Engine Coin, one of the hottest gaming tokens on the market. The token is 21 cents per coin, but the market cap is about $174 million. Is there actually this much real money in the project? Not really. Now, stay with me, because it is a useful metric, right? It provides a more clear picture of how the market values that coin. But how do you calculate market cap? Well, market cap equals the price of a coin times the circulating supply. So, for example, take Chainlink. They have a circulating supply of 350 million coins, but there is a total of 1 billion coins in existence that aren't on the market yet, that's held privately. To calculate the market cap, you take the price per coin times the circulating supply, and you get a market cap of $5.8 billion in Chainlink. Now, this does not mean that every single dollar, this amount of dollars is actually in Chainlink. And if this is getting confusing, especially if you're newer in cryptocurrency, stay with me. Let me give you an example and simplify this for you, right? That's what this channel does, try and simplify the market. Let's say that I create a token with a 10 billion coin supply. Hey, I'm going for mass adoption here. I develop it on a simple ERC20 contract, deploy it on Ethereum. A lot of companies are doing this, and I have it on an exchange. Then I convince my friend to buy one of these coins, just one out of the $10 billion supply, for $1. Boom, there you have it. My cryptocurrency now has an evaluation, and my token now has a $10 billion market cap. Congratulations to me. I now have created a promising new project that has received lots of investment. So in other words, it does not mean that $10 billion was invested in my token, and it really in no way helps me understand the value of my token. It's one metric to use, yes, I'm just saying it's not the end all be all. For example, let's look at real world coins. We see PivX, which is a privacy coin I've heard of, which is currently valued at a $30 million market cap. And then also valued at a $30 million market cap is some random coin I've never heard of, Bloomsd token. Wow, 30 million and 30 million. You would say that these coins' values are pretty similar. But we dig deeper. We use other metrics. For example, 24-hour volume. PivX's volume is over $1 million. Bloomsd token, $405 in the last 24 hours. By the way, this can be faked, this can be made up, but generally speaking, just because they have almost the same market cap, does not mean that they're equally as valuable. Coins can be manipulated, project owners, teams can manipulate. Just be aware. Just be aware. Okay, we're doing good. Before we get to tip number 3, let me just finish this analogy, this example that I gave you of creating 10 billion tokens and selling it to my friend for $1. Let's take this example even further. Let's say that my friend turns around and sells that token I made for $2 to somebody else. The market cap would go from $10 billion to $20 billion, even though only $2 has changed hands. So if you see a token with a $1 billion market cap, it does not mean $100 billion are in there. At most, it may have $10 or $20 million invested in it, which is $1 million is a lot, but it's nothing compared to $1 billion. If the token collapsed and went to zero, investors wouldn't lose $1 billion, they'd lose maybe 10 or 20 million. If you have any experience with this, if you have examples, comment below. Let's finish with one quote. Market cap creates the perfect tool to attract newbies by artificially inflating the numbers. A company, a project may pre-mine 1 million coins, then they release 1,000 coins in reality, which they then buy for $10 a piece. And boom, suddenly that crap coin has a $10 million market cap, and the noobs flock. And in 1 week, most of the time, those noobs get fleeced. The point is, the bottom line is, crypto assets with a low float and high total supply, not circulating, but total supply, can game the system and make themselves look valuable, right? If they're more liquid, they will pump faster, they will also drop faster. Okay, let's keep going. For tip number 3, we've sort of already discussed the basics of this tip, and it has to do with circulating supply versus max supply. And 2 examples we will use are Litecoin and Chainlink. For me, just looking at this specific metric, Litecoin is in a way better position for an investor when you look at circulating and total supply. Like I mentioned, 350 million Link are in circulation, but there is over 1 billion held by private investors / the team. That's over 60% that's being held privately. Now in crypto, people like to say, hey, it has a fixed supply. Unlike the US dollar, which they just keep diluting the value of the US dollar, this is fixed. Well, this is sort of a silent dilution, a silent inflation of 60% of the tokens that will be released eventually over time onto current investors. Now, this doesn't make a token bad or good. It's just another metric to consider as an investor. And let's put this in opposition of Litecoin. Litecoin has an 84 million max supply, and 65 of those Litecoin are circulating right now. And also miners have to mine them to bring them into existence. So it's a little bit different. The fundamentals, these metrics are just a little bit different. Let's keep going. Before we get to final thoughts, the last thing I'll say, and again, we sort of basically went over this, is most new investors look at price and they should be looking at market cap. Even though market cap can be manipulated, it is a better metric for evaluation than price. Because you would look at Bitcoin versus XRP and you would say, whoa, one Bitcoin costs $11,000, but one XRP is only 27 cents. If XRP's price just becomes even over the next 5 to 10 years with Bitcoin, wow, that's going to be a huge X on your money. When in actuality, 12 billion is a lot closer to 200 billion than a 10,000X. So the point is, when you buy XRP at 27 cents, it is not the same thing as buying Bitcoin at 27 cents because they have different supplies. Bitcoin, there will only ever be 21 million. Right now with XRP, there are 99 billion in total, 44 billion in the circulation. And that's it. If you have a different way to explain that, if I don't explain it quite as clearly, let me know. Or if you have questions, comment below. I'll try and answer as many as I can. All right. See you tomorrow.